It's time for business. Kate Moody joins us, starting with the latest in the long-running trade dispute between the United States and the European Union.
Yes, Mark. This has nothing to do with Donald Trump's own trade wars. This goes back much, much further. The World Trade Organization has now said the European Union can impose tariffs on up to $4 billion worth of U.S. goods over its support for plane maker Boeing. Last year, the organization gave Washington the right to sanction some $7.5 billion worth of European goods in a parallel case concerning Airbus. Now, unlike the trade war with China, this legal battle dates back to 2004. Both sides accused each other of giving illegal subsidies to their aerospace giants. Both sides have expressed willingness to intensify talks to resolve this dispute once and for all, but Brussels warned that Washington must withdraw its own tariffs or face retaliation. The global economy is still facing an unprecedented recession this year, but not as deep as initially feared. The International Monetary Fund has upgraded its forecast for economic growth, while warning that the coronavirus pandemic is still likely to scar industries around the world. Ellen Gainsford reports.
Shuttered for business, the global economy is reeling from the fallout of the coronavirus pandemic. This year's recession is expected to be the worst since the Great Depression of the 1930s. Economists from the International Monetary Fund warn it's going to be a long and difficult recovery. But there is some reason for optimism.
Living with a novel coronavirus has been a challenge like no other, but the world is adapting. As a result of eased lockdowns and rapid deployment of both monetary and fiscal policy support, the world is coming back from the depths of its collapse in the peak of this crisis, which was the first half of this year.
If the pandemic is kept under control, the IMF predicts the global economy will contract by 4.4% overall in 2020. That's 0.8% less of a drop than its June prediction. Emerging economies will be harder hit at 8.1% versus 4.7% for more advanced economies. Countries which rely on hard-hit sectors, including tourism, are likely to have longer-term repercussions. Inequality and poverty are both set to increase, with women, lower-skilled workers, and those in precarious employment set to be the worst affected. In the short term, the IMF is recommending countries continue to borrow to boost their flagging economies. And to tackle the long-term economic crisis, the organisation suggests higher taxes for the richest and measures to combat corporate tax avoidance.
In the UK, the number of people registering as unemployed has jumped by the most since the height of the financial crisis in 2009. Redundancies jumped to almost 230,000 for the 3 months to the end of August. The UK jobless rate hit 4.5%, its highest in more than 3 years. The British government is preparing to replace its pandemic wage subsidy scheme with a new programme which will cover less of furloughed workers' wages. Let's check in on the day's trading action. Now, the major European indices have closed lower. All sectors down except for telecoms. The DAX lost nearly 1% after a new survey showed a drop in economic sentiment in Germany. The CAC 40 down about 2/3 of a percentage point here in Paris. The FTSE 100 0.5% in London. Wall Street is mixed this hour. Airlines are dragging trade down as Delta Airlines announced steeper than expected losses, and the sector waits for movement on government stimulus. Apple shares are trading lower, although the Nasdaq is slightly above the flat line this hour. Apple set to unveil its latest iPhone later today. It's likely to be the first from Apple with 5G capacity. Well, shares of Johnson & Johnson have slumped as much as 3% today after it paused a trial for its COVID-19 vaccine. The pharmaceutical giant said one of its participants had fallen ill, but it planned to continue its research after a review from an independent safety board. Oxford University and AstraZeneca have resumed their trials after a similar pause in the process last month. Separately, Johnson & Johnson reported strong earnings for the third quarter, led by higher sales in its medical device unit and higher demand for some of its drugs. The International Energy Agency says the world will use about 5% less energy in 2020 compared to last year. It estimates that demand for energy isn't likely to recover until 2023 at the earliest, and potentially as late as 2025 if the effects of the pandemic are prolonged. Yuka Royer has the story.
As much of the world came to a standstill, the global energy market experienced a paradigm shift. While an economic slowdown reduced demand for fossil fuels, renewables took off, with solar power leading the way.
Solar is the new king. We expect that even in the absence of major policy shifts, renewables alone will meet 80% of the global electricity demand growth within the next 10 years.
According to the International Energy Agency, demand for oil is set to drop this year by 8.5% and for coal 6.7%. Renewables were the silver lining in the global energy market, the only area that saw growth. The agency expects renewables to overtake coal as the primary source of electricity in the next 5 years. Energy-related CO2 emissions are estimated to have declined 7% in 2020, more than the total drop in global energy demand. But that's not necessarily good news, as an economic slump also slows down the transition towards cleaner energy. The crisis has also led to reduced access to electricity in some poorer nations. The IEA is urging governments to invest more into sustainable energy to turn the coronavirus crisis into a catalyst for change.
Mark, that's all for now.
Kate, thank you very much indeed. Kate Moody with The Business. Back very shortly. Great to see you.